from Jefferies coming through. Let's move on and say hello to our first guest on the show. We have Ben Powell, Chief Middle East and APAC Investment Strategist at the BlackRock Investment Institute, joining in. Ben, good morning. Great to have you on. So let's start with China, actually, because, this was once again a hyped-up, well-tracked meeting, this economic conference. But one is not sure what exactly has come out of it, apart from promises of bolder reforms, bolder policy measures. Your thoughts and your view on the market there?
Good morning. Great to be with you. Yeah, that's exactly right. It continues to be 1,000 water pistols in China and no bazooka. So another kind of version of this. And I think over the last year or two, markets have become increasingly unconvinced by policymakers. So the reality is that it's very much a case of show me rather than tell me, meaning I think markets are going to be reluctant to buy into speeches and rhetoric and promises. And we're very much going to wait for policy delivery, specifically fiscal stimulus targeted at unleashing Chinese wallets. Chinese households have got lots of money, but they've also got lots of anxiety. So that money for the moment is staying locked up. The question for 2025 is, can policymakers create a confidence recovery? If they can, there's quite a good story, I think, in China. But again, confidence, that's easier said than done, and we're not quite there yet.
Hi, Ben. Good morning and good to see you. Ben, the last time we chatted, you told us maybe these FI outflows out of India could be abating, and that's happened. So good on you. And you were more positive on India than China. So that as well has worked out pretty much in favor. Now, getting back to the central bank action, yesterday we saw some easing from the ECB, the Swiss bank as well. All eyes are on the Fed now in the coming week. And because of a couple of data points, now some part of the market is a little bit nervous whether or not the 25 basis points will come or not. Though the Fed futures are indicating that's a done deal. Do you think that they could skip in the coming meeting, that rate cut that the street is anticipating?
I think they're going to cut next week. So the Fed normally doesn't like to let the market down. So once the market is fully expecting something, which, as you rightly observe, is the case, the market is really expecting a cut next week. So if the Fed doesn't deliver, that would be kind of a needless shock. So I think the Fed will follow through. Longer term, meaning I guess through 2025, there is still an inflation battle which is ongoing. That war is not over. Inflation continues to be sticky. In our view at the BlackRock Investment Institute, that's driven by structural forces. And we think that's going to give the Fed relatively little room for maneuver. So next week, to answer your question, clearly we think, yes, they're going to cut. But 2025, probably they can only do maybe 2 more cuts to get down to 4%. And then we think they're going to kind of be stuck because inflation continues to be a bit of a problem more than they would prefer.
Ben, do you think 2025 is going to be as strong for the U.S. equity markets? Because they were the standout, market this year in terms of corporate profits, economic strength. Will 2025 be as good?
We think so, yes. We've actually, in our 2025 global outlook, we at BlackRock, the world's largest investor by far, we've actually just increased our US overweight from +1 to +2. So we, while mindful of valuation, of course, valuations do look a little expensive. I think that's true, and I want to acknowledge that. But it seems like the excitement around, let's say, the combination of the deregulatory fervor with the new administration coming in, they seem to be maximally pro-business. We had President-elect Trump on the floor of the New York Stock Exchange yesterday, high-fiving traders and market participants. This does feel like a very different situation. So that combination of deregulatory enthusiasm and the ongoing AI megaforce, which is, it's not just in the US, but it clearly is centered in the US, we think will continue to give US equities pretty potent tailwinds. So yes, we think 2025 should continue to be more of the same, more good news for holders of US equities.
Okay, all right. So more of the same in 2025. Got it. And we will want to have more of you in 2025 as well. Looking forward to more conversations. You have a great end of the year.
To you. Thank you.
Thank you.